We're going to get started here. We have a number of members that are coming over from the National Prayer Breakfast, so they'll come in and the ranking member will come in as he is able to. But I'm Chairman Andy Kim. I'm eager to get started here and just want to have an opportunity to be able to make sure we're hearing from the incredible people that we have today that are going to be sharing with us. Small businesses make up over 99% of all businesses in the United States and employ almost half of our nation's workers. In 2018 alone, America's small employers added 1.9 million net new jobs to the economy. As I've seen firsthand in my district in New Jersey, Main Street businesses are the backbone of our communities. In my home state, small businesses employ nearly 2 million people, making up nearly half of the private workforce. Among them are approximately 58,000 veteran-owned businesses and over 250,000 female-owned businesses, which is why I'm particularly happy to be chairing this hearing today. While nearly every entrepreneur faces obstacles when it comes to getting a new business off the ground and running, entrepreneurs are traditionally underserved backgrounds from traditionally underserved backgrounds tend to face even greater barriers to entrepreneurial success. We often hear that access to capital is the biggest challenge facing aspiring entrepreneurs. As the lifeblood of all new businesses, affordable capital is crucial to starting a business. Without it, new firms often cannot buy inventory and equipment, pay their employees, and expand operations. Unfortunately, studies have shown that women, minorities, and veteran-owned businesses face heightened obstacles to securing affordable capital. For example, the Minority Business Development Agency found that minority-owned firms experience denial rates 3 times higher than other firms. Despite a similar demand, 60% of veterans reported a financing shortfall and had approval rates 10% lower than all other firms. In response to these challenges, minority-owned firms are more likely to rely on personal sources of funding, such as savings, a family member, or credit. This unfortunate reality is not only unsustainable, it is also hindering small business growth. Unfortunately, barriers to entering federal procurement markets are also common for underserved firms. Federal contracts are a great source of potential for business growth, and it is crucial that we find ways to make them more accessible to budding small firms. Setting government-wide small business contracting goals was a meaningful step towards increasing small business participation in the federal procurement marketplace. However, as the numbers show, we still have work to do to level the playing field for underserved businesses. For instance, women-owned businesses were awarded $21 billion of the total $500 billion in contracts for FY 2017. This is highly disappointing considering that women entrepreneurs contribute over $1 trillion a year to the U.S. economy. Meanwhile, rural businesses are facing a unique set of challenges, including smaller labor pools, slow population growth, net out-migration, and health problems including diabetes and opioid addiction. Though these issues impact rural communities at large, they can also have a devastating impact on rural entrepreneurship and business growth. To address these disparities, SBA created several initiatives which we will hear more about today. For many underserved businesses, initiatives such as the Small Business Development Centers, Women's Business Centers, SCORE, Veterans Business Outreach Centers are there to provide mentorship and other key services. Today, I look forward to hearing the recommendations and feedback of our distinguished witnesses to strengthen these initiatives, as well as other federal programs and private sector actions serving underrepresented entrepreneurs. I hope today's hearing will be a productive opportunity to explore the challenges facing small firms while identifying areas where we can work together on legislation that seeks to level the playing field for America's small businesses. Thank you. The ranking member will submit his statement for the record. I would like to just, and if other committee members have opening statements prepared, we would also ask that they be submitted for the record. I would like to take a minute to explain the timing rules, and each witness will get 5 minutes to testify. Each member will get 5 minutes for questioning. There's a lighting system to assist you. The green light will be on when you begin. The yellow light will come on when you have 1 minute remaining, and the red light will come on when you are out of time. and we will ask that you stay within the time frame to the best of your ability. Now I'd like to introduce our witnesses. Our first witness is Ms. Marla Bolanek. Ms. Bolanek has been the executive director of the Latino Economic Development Center since 2014. She has also worked for SeedCo, where she assisted businesses in Lower Manhattan that were impacted by the attacks of September 11th. Ms. Bolanek is a member of the board of directors of the National Association of Latino Community Asset Builders. She is a graduate of the University of Wisconsin at Madison and received her Master's of Arts degree from Johns Hopkins University of Advanced International Studies, SAIS. Welcome back, Ms. Bolanek. Our second witness is Ms. Sharon Pinder. Ms. Pinder is the president and CEO of the Capital Region Minority Supplier Diversity Council, a nonprofit corporation whose mission is to link corporations and government agencies with minority business enterprises. Prior to joining the council, she served as the director of the Mayor's Office of Minority and Women-Owned Business Development for the City of Baltimore. She was also Maryland's first appointed cabinet secretary of the Governor's Office of Minority Affairs. Ms. Pinder holds a Master's of Science degree in Technology Management from the University of Maryland, University College, where she has the honor of serving as Professor of Practice in the School of Graduate Studies. Welcome, Ms. Pinder. Our third witness today is Mr. Davey Leghorn. Mr. Leghorn is the Assistant Director of the Economic Division of the American Legion, where he oversees employment, small business, and VA contracting policies. He also administers the American Legion's Veteran Entrepreneurship Program. Mr. Leghorn served as a mortar infantryman in the United States Army, then as a civil affairs specialist with the 450th Civil Affairs Battalion. He currently serves as the Sergeant at Arms for George Washington Post 1 in the American Legion Department of the District of Columbia. Welcome, Mr. Leghorn, and thank you for your service. And our today's final witness is Mr. Mike Romano. Mr. Romano serves as the Senior Vice President of Industry Affairs and Business Development for NTCA, the Rural Broadband Association. NTCA represents roughly 850 telecom companies throughout the United States, many of whom are located in rural communities and small towns, with the goal of quote, building a better broadband future for rural America. Prior to joining NTCA in 2010, Mr. Romano worked at Bingham McCutcheon LLP, Global Telecom and Technology, American Online, and Level 3 Communications, and Swindler Berlin. Thank you for joining us today. I wanted to just get started right from the beginning. So, Ms. Bolanek, you're recognized for 5 minutes.
Good morning, Subcommittee Chairman Kim and members of the subcommittee. It is my sincere honor to be speaking with you all today. My name is Marla Bolanek, and I'm the Executive Director and CEO of the Latino Economic Development Center, LEDC. LEDC is a 28-year-old organization with the mission to drive the economic and social advancement of low to moderate income Latinos and other underserved communities in the DC and Baltimore metropolitan areas. We operate out of 6 offices in the region with over 40 professional bilingual staff providing top-notch services to our clients. On an annual basis, we serve well over 4,000 low to moderate income residents. We are SBA microlending intermediary, SBA community advantage lender, and certified community development financial institution. Since we began lending in 1997, we have rolled out more than $15 million in capital and have provided small business technical assistance services to thousands of aspiring and existing small business owners in the region. LEDC is a member of, and I sit on the board of the Opportunity Finance Network, a membership organization representing the over 1,000 CDFIs in the United States. The challenges I will outline are consistent with what we hear from our fellow CDFIs operating in similarly underserved communities around the nation. LEDC exists to help underserved populations overcome the challenges that stand in their way of achieving their full potential for achieving financial stability and income mobility. While the challenges before them are countless, those I would characterize as the most significant are lack of access to capital, lack of access to information and educational resources, poor or no credit history, and systemic and institutional racism and sexism. In my testimony, I will elaborate on each of these barriers to success. As the head of a Latino-facing organization and member of the board of directors of the National Association of Latino Community Asset Builders, I will also include information on small business challenges that are specific to the Latinx community. So starting with lack of access to capital. The traditional commercial banking system is often not a viable resource for underserved small businesses. Commercial banks defer to a fixed minimum credit score they will accept for loan approvals and are further hindered from serving small businesses due to restrictions around lending to startups or providing smaller dollar financing. A recent report from the Woodstock Institute cited that the number of CRA reported loans under $100,000 in 2015 remained 58% lower than in 2007. What's more, bank branches are consolidating and closing at a steady clip, with 1,700 bank branches closing in the 12 months between June 2016 and June 2017. The alternative for underserved entrepreneurs operating in this climate is to take out credit cards that often charge high interest rates, access high-cost financing via the emerging online lending industry, tap into merchant service cash advances, obtain a loan from a loan shark, or obtain a loan from the CDFIs in their area. I will note that we have several loans in our portfolio that are restructured financing deals for entrepreneurs who fell prey to the allure of online lenders. On the other hand, data shows that CDFIs and OFN's membership alone have originated more than $65 billion in financing in urban, rural, and Native communities through 2016. To quote OFN's president, Lisa Mensa, CDFIs exist to move money to places missed by traditional lenders. However, CDFIs face challenges in terms of reaching the very communities that need our services due to minimal or non-existent marketing budgets, challenges to capitalizing our loan funds, and or sustaining the high overhead costs associated with the labor-intensive loans we underwrite. In terms of lack of access to information and educational resources, starting or growing a business is not for the faint at heart. In an ideal scenario, an entrepreneur has the time and support to complete an in-depth business plan, complete with market analysis, elaborate revenue projections, a well-developed management plan, and options for financing their one-time startup costs, as well as ongoing variable costs to come. Unfortunately, underserved entrepreneurs do not always have access to business planning information or resources, nor do they have the time to invest in business planning, as they're looking to their business idea as a source of income for themselves and their families. In addition, the regulatory framework is a maze of processes and agencies that few could understand without outside support. Depending on the business type, entrepreneurs frequently need to go through several licensing agencies and register with their state and jurisdiction to be compliant. Layer on top of that the language barrier that many of our immigrant Latinx clients face, and it's doubly challenging to meet compliance requirements. I'm actually going to skip the reference to poor and no credit history, although it's a significant challenge. I wanted to get to sort of the last section, which I think is probably the most challenging, around systemic and institutional discrimination. So my testimony cites the same research that you cited, Mr. Kim, from MBDA, around the disproportionate disapprovals for minority and female borrowers, and just showing that identical applications from minority and non-minority applicants were rejected up to 54% times more frequently. And for women, women-owned businesses received nearly 50% less funding than men-owned businesses, and that funding actually declined by 42% between 2016 and 2017. Another sort of, in closing, my request would be that we do not lose sight of the protections for consumers in general, as well as minorities. The CFPB, OCC, Fed, and FDIC should continue and deepen their evaluation of commercial bank activities with regard to the demographics of who and who is not receiving loans. Just yesterday, the CFPB said it plans to abolish most of its critical consumer protections governing payday loans. And while that's not necessarily a direct correlation with our small business clients, it just is a signal to the attitude of the CFPB at this moment in time, which is certainly troubling. Specifically, the CFPB should finalize its implementation of Section 1071 of the Dodd-Frank Act, which would require financial institutions to compile, maintain, and report information regarding credit applications made by women-owned, minority-owned, and small businesses. This kind of information would provide policymakers with insights into the precise shortcomings of diverse businesses in seeking credit, enabling policymakers to craft narrowly tailored legislation designed to remedy the shortcomings within each of these entrepreneurial communities. Thank you.
Thank you
Thank you
so
so
much.
much.
Thank you so much. Before we move on to our next witness, I just wanted to recognize our ranking member here and turn it over to him for his opening statement.
Thank you, Mr. Chairman. Thank you for your kindness in doing that. My apologies for my tardiness. We're at National Day of Prayer, so I appreciate that. I just want to say that as a small business person for 34 years and a person who has lived the American dream, come from extraordinary poverty to being a very successful business person, there's nothing been greater joy for me later in my life is to help small businessmen and women see their ideas brought to life to start small businesses. I've helped so many try to actually write business plans and to find access to capital, help them mold and model their business plans to work. And so with about 99.9% of all businesses in the United States being classified as small, the impact that small businesses have had to our economy cannot be overstated. In my home state of Oklahoma alone, we've got 340,000 small firms who employ over 700,000 people. Many of these businesses are owned by minorities, women, and veterans, and many of these businesses are located in rural areas. Small businesses owned by minority, women, and veterans face a unique set of challenges ranging from raising adequate financing to building social capital to finding the effective mentors. Rural businesses, however, while facing those challenges, also tend to face a different set of challenges, most notably access to reliable, affordable broadband service. Today, more than 24 million Americans lack access to high-speed internet, the vast majority of whom live in rural communities. When comparing urban and rural broadband development, 97.9% of urban America has access to both fixed and mobile broadband, while only 68.6% of rural citizens have the same access. The lack of a solid business case for rural broadband deployment remains a central reason for what is often referred to as the digital divide. Large telecommunication companies have little incentive to invest in broadband infrastructure in areas with low population density. Instead, small telecommunication carriers are far more likely to invest in rural communities, often because they are communities. Frequently, however, these small firms face numerous challenges in their efforts to increase broadband access. Small businesses specifically require access to reliable and affordable technology to compete with larger competitors. According to a recent study, digitally advanced small businesses were shown to be more than 3 times likely to create jobs, experience revenue growth at a rate 4 times higher than small businesses who don't employ technology. Yet, despite such outstanding returns, many small businesses do not take full advantage of the technologies available to them. Often, this is due to owners not realizing the benefits of such tools offered to them, or simply lacking access to reliable technological resources as a result of cost or location. Today's hearing will allow us the opportunity to further discuss these and other challenges that businesses owned by minority, women, and veterans and rural Americans face, while also exploring potential ways to improve and elevate these issues moving forward. I look forward to hearing from our witnesses. Again, apologize for my tardiness and to having a productive conversation. Thank you, Mr. Chairman. I yield back.
Thank you. I look forward to working with you on this subcommittee to do what we can for small businesses. And I have to say, I'm just in awe of your experience, the great success that you've had over your career, your particular knowledge about small businesses. I think it's going to add a tremendous amount of expertise to this subcommittee, and I'm looking forward to working with you on that.
Thank you.
Why don't we move back to the witness panel? I wanted to move it over to Ms. Pinder, if you don't mind. You're recognized for 5 minutes.
Good morning. I am Sharon Pender, and for the last 4 years, I've been President and CEO of the Capital Region Minority Supply Development Council. So good morning, Chairman Kim, Ranking Member Hearn, and distinguished Committee. I thank you for the opportunity today to have this conversation. And I'm actually in real awe because as I look at the picture of the late Perrin Mitchell on the wall as when he was chairman of the Small Business Committee, I think about 40 years ago and the foundation of all the programs that exist today, Public Law 750. And so as we look at the conversation, is that the basis of the foundation of the programs and the challenges that you all talk about, or we're going to talk about today, still exist 40 years later. And so I just, as Capital Region Minority Supply Development Council, we are the nation's certifying body for the private sector. Created on the heels of civil unrest in the late 60s, our mission is to certify, develop, and advocate for minority businesses. And so the Capital Region, my particular territory is the state of Maryland, District of Columbia, and Northern Virginia. In addition to that, I operate 2 MBDA centers. One is the MBDA Center, Washington, D.C., and the other one is the only federal funded center, Federal Procurement Center. And so as we look at all the issues that we all agree upon, I was talking to a group of minority businesses yesterday, and I just arbitrarily asked them the question, what are your issues? You know, what are the problems that you face as businesses? And without script, just generally what they said to me was capitalization or under the capitalization of their businesses, not having that network or those relationships, and not being able to kind of navigate as you look at contracts. And so as we look at, the 21st century, many programs and ideas aimed at leveling the playing field have existed for over 40 years. And across this country, we witness enormous gaps that exist between the current measures of minority and women availability and a number of relative size of minority-owned firms that you would expect to exist across the country. These gaps are not without severe consequences for economic health of the country as a whole. When minority businesses thrive, communities of colors thrive as well. Diverse businesses, which are more likely to hire local and employ people of similar backgrounds, work as powerful forces for economic development. Communities of color will become the majority in 2044 or before, and how minority businesses fare will impact the sustainability and the strength of our nation. Our nation's economic history is rich with examples of public policy and government actions facilitating the spirit of entrepreneurship and directly contributing to the success of capitalism. At critical junctures throughout the industrialization of America, the federal government has proactively redirected the flow of commerce and, in effect, has launched the birth of new giants of American industry. From the issuance of federal land grants that were essential to spurring the growth of railroads and to breathing life into the telegraph and telephone industries, from granting the licenses and broadcasting frequencies to radio and television companies, and from the construction of federal highway systems to the creation of aviation and aerospace programs, the government has been a willing partner in forging a path for new industries. For example, the adoption of airmail as the primary mode of transportation for the U.S. Postal Service consequently aided in contracts to a number of airlines and placed them in a path that they became really successful in the private airline industry. I'm going to skip around because I want to get to the part. So what we should consider, that timing is everything, and that this is a critical juncture in our history with an opportune time to use the model of the past for purposeful and intentional support from the government. Today's minority businesses can be tomorrow's moguls, whereas past discriminatory practices prevented their participation in building some of the nation's top industries because, quite frankly, minority businesses were not at the table when those industries were born. There's an opportunity now by which minority businesses can benefit by being at the table during the infancy of some of today's emerging industries and technologies. As in the past, partner with the government, and as that industry grows, those minority businesses will grow as well. Thank you.
Thank you for that, and I agree with you. Timing is everything, and we are at a critical juncture, which is why we're grateful to have your expertise here today to help us think through the way forward. So thank you so much for that. Mr. Leghorn, I want to turn it over to you. You're recognized for 5 minutes.
Chairman Kim, Ranking Member Hearn, and distinguished members of the subcommittee, on behalf of our National Commander Brett P. Rystad and the nearly 2 million members of the American Legion, we thank you for the opportunity to testify today on exploring challenges and opportunities faced by veteran businesses. In our testimony, we covered a broad spectrum of topics from federal contracting to entrepreneurial development programs and access to capital. We would like to dedicate the balance of our time this morning to just 2 issues. One detriment to the veteran small business industrial base has always been the misinterpretation of legislation that has designated SDVOSBs as a preferred contracting group. In legislation from 1999 and 2003, Congress gave SBA and other agencies broad business development authority to help veterans. Unfortunately, the SBA and FAR Council announced in 2005 rulemaking comments that government-wide SDVOSB program was for established businesses and was not meant to aid in development for new businesses. The Kingdom Ware decision affirmed the intent of the SDVOSB set-aside goal in the Veterans Entrepreneurship and Small Business Development Act of 1999 was to encourage small businesses and was not intended for the purpose of fulfilling a quota. The Supreme Court opined that the goals exist to provide real opportunities for service-disabled veterans and that the subsequent enactment of the Veterans Benefits, Healthcare, and Information Technologies Act was ancillary in nature to the Veterans Entrepreneurship and Small Business Development Act and shares the same intent. This is significant because agencies are now reminded that this reasoning applies to both the Small Business Act goals as well as goals under agency-specific laws like the Veterans First Contracting Program at VA. The American Legion had hoped that the outcome of Kingdom Ware would force SBA and the FAR Council to revisit the rules of the Veterans Entrepreneurship and Small Business Development Act. This has not occurred. To this end, the American Legion asked Congress to encourage SBA and the FAR Council to carry out their business development authority. Further, the Kingdom Ware decision signaled the Supreme Court's approval for a model of Veterans First or Service-Disabled Veterans First to exist in contract set-aside and preference programs. Congress can now extend this model government-wide in a Small Business Act or in agency-specific legislation. Additionally, the American Legion would like to discuss our support for SBA's entrepreneurial development programs. Since 2012, the Boosted Business curriculum taught during the military's Transition Assistance Program has been very successful. Since its implementation, Boosted Business has been the litmus test that has convinced veterans to launch their business or to delay the process until they're ready. In the 2019 National Defense Authorization Act, there was an attempt to make at least one of the TAP capstone courses mandatory. The American Legion supports this effort and hopes this will expose more service members to SBA and their grantees. The American Legion believes more service members should have access to SBA programs. Currently, National Guard and reservists are not eligible for veteran entrepreneurship and loan programs until they are activated under Title X. This is why the American Legion supports legislation that would amend 15 U.S.C. to extend the eligibility for veteran-focused SBA programs to service members who have been ordered to perform active service for more than 30 consecutive days. Increased utilization of SBA's veteran-centric programs will require more veteran business outreach centers. The American Legion supports the creation of more VBOCs. Puerto Rico, Guam, Virgin Islands, and American Samoa are often overlooked for veterans programs and services, despite the heavy military presence and recruitment efforts that occur there. This is why we support the Puerto Rico Small Business Assistance Act. The American Legion asks this committee to authorize VBOCs in Puerto Rico and other underserved areas where veterans reside. In conclusion, Chairman Kim, Ranking Member Hearn, and distinguished members of the committee, the American Legion thanks you for the opportunity to explain the position of nearly 2 million members of the American Legion, and we look forward to any questions you may have.
Thank you, Mr. Leghorn. That was very informative. I wanted to turn it over. Mr. Romano, you were recognized for 5 minutes.
Thank you, Mr. Chairman. Good morning, Chairman Kim, Ranking Member Hearn, and members of the subcommittee. Thank you for the opportunity to testify today. My name is Mike Romano. I'm the Senior Vice President at NTCA, the Rural Broadband Association. We represent approximately 850 small businesses that provide broadband in rural America. Our hope today is to offer a helpful perspective as a complement to the discussion of underserved areas and populations by my fellow witnesses. The capital-intensive nature of building infrastructure is particularly challenging in light of the deeply rural, sparsely populated areas NTCA members serve. Yet even as our members' rural broadband networks are difficult to build and maintain, they are essential to ensure that other small businesses and consumers in rural America can connect with the rest of the world. Indeed, we believe that a key to helping underserved communities of all kinds in the 21st century is to deliver 21st century connectivity. High-speed broadband upon which users can rely to invest in and operate their own businesses to create jobs and provide opportunity. Investing in broadband has far-reaching effects for urban and rural America alike, creating efficiencies in healthcare, education, agriculture, energy, and commerce. America needs rural broadband not only to help farmers efficiently produce crops sold across the U.S. and around the world, but to help small businesses of all kinds participate in the national and global economies, and to help all rural citizens experience the life-changing benefits of distance learning, telemedicine, and teleworking. This task of connecting everyone, however, is easier said than done. These challenges can present in different ways in different parts of the country for different communities of users. In rural areas, communities are more likely to be underserved from a broadband perspective because the economics of connecting them are difficult, if not impossible, to overcome. Distance and density present physical challenges unlike any other for the business case of deploying and sustaining connections. To compound the business case further, rural areas are on average poorer than many urban areas and have lower broadband adoption rates. Despite such challenges, NTCA's small business members have worked to connect rural America through an effective mix of entrepreneurial spirit, community commitment, and federal and state support programs. Most NTCA members live and work in the communities they serve. They therefore have every incentive to upgrade networks that connect their workplaces, their kids' schools, their libraries, and their hospitals. But as I mentioned, the business case and challenge is challenging and complicates greatly both access to and use of capital. This is where federal and state programs play a key role. For example, the Federal Universal Service Fund, or USF, enables and sustains communications infrastructure in rural America, helping carriers make the business case needed to justify loans or use of other private capital. Although the USF's effectiveness was hampered for years due to arbitrary caps and regulatory uncertainty, the FCC responded late last year to consistent calls from hundreds of members of Congress on a bipartisan basis, calling for an infusion of resources and other improvements. It is our hope that the bipartisan reforms adopted by the FCC will unleash a new round of broadband investment in rural areas and help to sustain the networks already built. It is important, too, that the USF programs involve more than just helping connect rural areas. More than 2 decades ago, Congress wisely structured the USF as a comprehensive umbrella with components that seek to address connectivity concerns for discrete sets of potentially underserved populations through coordinated programs, schools and libraries, low-income consumers, rural health care, and high-cost support for rural networks generally. Indeed, in helping to make sure rates for services are affordable on rural networks, the high-cost program of USF helps Americans living in rural poverty afford better access to communications. We therefore believe the federal universal service mechanisms as a whole represent a well-thought, comprehensive strategy aiming to ensure that every American, regardless of the specific challenge that renders them at risk of being unserved or underserved, will be connected. The Rural Utilities Service, or RUS, also plays a significant role in helping small broadband providers access capital to deploy infrastructure in areas where investments are measured, returns on investment are measured in decades. Congress has expanded the role of RUS in rural broadband deployment through significant resources for new broadband loans and grants. These additional funds are welcomed, and it is now important to ensure that the USF and RUS and other programs are coordinated and used as efficiently as possible. Much has already been accomplished in connecting rural America. For example, 70% of NTCA's customers already have access to 25.3 megabits broadband, which the FCC deems to be the standard at this point for broadband, and many have faster connections, even up to gigabit service. But much work remains too, especially in the areas not served by smaller operators like those in our membership where a digital divide exists. We look forward to working with your subcommittee and your congressional colleagues to ensure that we can address the connectivity needs of underserved and unserved areas and keep connected those areas that are fortunate enough to be served today. Thank you.
Thank you, and I just wanted to thank again all four of you for your testimony here today. I'll certainly start moving forward with turning it over to my distinguished colleagues in just a few minutes, but I did want to just start by asking a few questions myself. I wanted to start by saying I come into this position with a lot of humility that, I have a lot to learn. All of us have a lot to learn about what it is that we can do to serve small businesses. And the four of you, amongst many others, bring that kind of experience that we need to keep hearing about. I joined this committee, and this was a priority of mine because my district in New Jersey is a small business district. My district has, from the largest employer, a joint military base, but all the small businesses that continue to serve that base or are a part of both Burlington County and Ocean County. My priority is always to protect these military families and veterans living in my district in particular. And less than 3 months ago, SBA and the Federal Reserve Bank of New York released a comprehensive report on the state of entrepreneurship for military veterans, and it's quite frankly concerning. The report found a generational decline in veteran entrepreneurship, with fewer young veterans owning businesses than past generations. At the same time, we're now beginning to see veterans owning businesses at lower rates than non-veterans. I wanted to ask unanimous consent to submit this report to the record. Without objection, the motion is agreed to. We know that historically the opposite has been true, that veterans have been generally more entrepreneurial than non-veterans. Of course, the skills gained during military service, teamwork, discipline, perseverance, strong work ethic, and crisis management all are important parts of the equation, and those skills certainly haven't changed. So, Mr. Leghorn, I wanted to build off of your very informative statement. I wanted to ask you, just taking a step back, what's changed? Why, in your experience, are fewer young veterans launching businesses and having difficulties with access to capital and the financing shortfalls? I just wanted to hear from you that bigger picture.
Thank you for your question, Chairman. I think the main reason why we're not seeing as many veterans get into small business these days and embrace that entrepreneurial spirit is because of the recession, and we're still kind of climbing out of the recession. A lot of these folks are very hesitant to take risks right now. As the economy improves, I hope that this is a trend that will be reversed. In terms of lending, I think one of the rather cool things that have happened since the decline of regional and community banks is that lending has kind of diversified, and this is a trend we like to see a lot more of. And I think when the veterans do come back and start their own businesses, the lending field is going to be very different for them, and it's going to be very conducive to starting a new business.
Thank you for that. I mean, based on what you were saying, what we heard from all four, not every business owner experiences the same struggles when starting or growing a business. So, Mr. Leghorn, just one final follow-up. What are some of the obstacles unique to veteran startup companies? I wanted to get a better sense of what you feel like is, particular obstacles or opportunities that are being faced and things that we might be able to do to support.
The main thing that hampers veteran-owned small businesses is collateral, and we're generally cash poor. And that's why folks like what I spoke about before with the diversity of lending and CDFIs are so important for the veteran community, because it's normal bank products generally do not work for us, and larger banks are less likely to make 7A loans to folks without collateral.
Well, thank you for that. I wanted to make sure we turn it over to my other colleagues who have, I'm sure, a very insightful questions. So, Ranking Member Mr. Hearn, I wanted to turn over to you. You're recognized for 5 minutes.
Thank you, Mr. Chairman. I just, as an opening statement to this, to your testimony, I will tell you, I look around, I think I may be the oldest up here. I've been certainly creating jobs for a long time, I know that. First small business in 1985. I will tell you, Also, having started a bank and still in banking, sit on the board until I got this gig in November, and I had to resign that board. But I chaired the loan committee for 10 years. And as you probably can imagine, I have a tremendous heart for small businesses and people who want to take that journey. And Mr. Leghorn, you said your problem with your folks are that's lack of collateral and cash poor. I would tell you that represents about 99.9% of the folks out there who have an idea. Is how do I get that idea off the ground? So I would say that's probably ubiquitous to everybody that's trying to create a job or create a business for the first time. I will tell you, you are so right that there are a lot less community banks today than there were 15, 20 years ago. And Dodd-Frank was really the catalyst to that, because right now community banks are hiring over the last 5 years, are hiring a lot more compliance officers than they are actually lending officers, because you still have to make money in the banking business, and you have to also comply with federal government regulations. So, you all have to work within the banks. The banks are very competitive. They're trying to loan to everybody, and they still have to meet the credit worthiness that's required of them of the federal government, because they are monitored relentlessly, audited by the federal government and by their banking institutions in their states. And so as we look at this, we've got to figure out how to help folks get mentored, and I think your agencies do that, how to present a business plan, because everybody has to look at everybody as if there are no color, there are no genders to actually to actually make a loan. Because we have to have the ability to repay our loans, either through a guaranteed process through the SBA, or if it's a traditional loan, which many are made, there has to be the ability to actually function and make that loan work. Is it Pender? Could you tell me, since we're talking about this mentorship, could you tell me how you do that with the folks that you represent, and getting them off the ground with it? If they come to you with an idea, or
Our organization is made up of the Fortune 500 companies in terms of the corporations. So we don't necessarily look at startups. And so there are when a startup comes to us, our question is about, are you ready to do business with these corporations? And if they aren't ready to do business, there is some building capacity kind of things that we do. And so startups, dependent upon the industry, because sometimes industry, if it's like information technology, or if that's the idea, it may attract more equity kind of things. But to answer your question, we do mentor companies in terms of getting them prepared to do businesses with our corporation. And we do that in a number of ways. We have a MBE Academy. Let's say we have educational and training programs to kind of help people become, at the end of the day, competitively viable.
okay, Mr. Romano, more and more people today, usually they're self-proprietors when they don't really have employees. They have an idea, and they, to go from being an idea to having multiple employees, which lends itself to usually going into an urban area. If you live in the rural area, which many of Americans do, especially throughout the Midwest, how does what you're trying to accomplish, putting broadband in rural areas, how does that help them make that transition from an idea to concept of starting making money and getting contracts and work to getting employees?
Thank you, Ranking Member Hearn. I would say that the first thing is, if you're looking to locate a business, one of the first things we hear from relocation firms or from folks looking to get something off the ground is, what kind of connectivity do I have? Because whether it's obtaining supplies, finding customers, finding markets, that connectivity is critical. One of the programs we've started is called Smart Rural Community, and it's really intended to focus on not just the fact that you've got networks out there, but sort of celebrate and accentuate the uses of them, focusing on what are people doing to generate economic development, job creation, and therefore be able to stay in a rural area rather than have to move necessarily to the city. We want people to be able to choose where they live rather than be forced to live in a certain place based upon what kind of access they have.
Thank you. One last question for, is it Ms. Billenick? Oh, wow, I'm 2 in a row. That's good. Could you help me understand, and I apologize that I missed your opening statements, but could you let me know what's your default rate of when you're trying to lend and get folks started?
So we have typically stayed below a 10% default rate, which we feel is excellent given the fact that we're giving loans to what folks would call sort of the most risky population out there. That's startups, that's folks with poor or no credit, and so we're very proud of that.
That's incredible.
Default rate. Yeah, thank you.
Thank you.
Great, thank you for that. I wanted to recognize my colleague from New York, Congressman Delgado.
Thank you, Chairman, Ranking Member. Thank all of you. I find your testimony very, very informative. I'm going to get right to it. I have a few questions. So in parts of my district, upstate New York, Hudson Valley, Catskills, very, very rural area, I have driven by signs that say broadband access coming soon. It's the sight that is hard to imagine in New York, in the USA, in the 21st century. I can overstate how big an issue this is for small business and communities in my district in upstate New York. Mr. Romano, your testimony very powerfully speaks to that. In today's global economy, it's unthinkable that startup businesses, mom and pop shops, young students, small dairy farmers, and innovative sustainable ag operations are being left behind because of where they live and operate. Now, my state, has made significant investments of late to bridge this gap. But as we look to a more connected future, I think it's critical that we also work to ensure equitable broadband access. And again, as you note in your testimony, the minimum service thresholds today will be unworkable for folks tomorrow. We should be aspirational as we think about the quality and speed of service folks need to keep up with our rapidly changing economy. So, with that in mind, Mr. Romano, what is an acceptable speed of service, not by definition, but in practice? And how can we ensure rural communities like mine don't get left behind again?
Thank you, Congressman. We have a number of members in your district, and I know that they're doing a very good job on broadband, but they also look around and see the challenges you're talking about. New York has taken important steps to try to address that. It's somewhat frustrating sometimes when you focus on a static speed definition. You're building networks financed for, and then intended to last for decades, 20 years. We really believe that you should be looking more at the future-proof utilization of the network, the applications that are going to be utilized, not aiming for a speed standard by date X, but thinking about, will that network be scalable to fulfill demands that we might expect reasonably 10, 15, 20 years from now? Telemedicine applications, 4K TV definition, 8K, beyond. So we really like to focus more on the future-proof nature of the technology underlying the network than at speed at any given moment in time specifically.
And I appreciate your desire not to want to put a number out, but is there a range?
I would say we should be aiming for networks that are capable of delivering at least 100 megs today and scalable to hit gigabit and beyond tomorrow.
Good. Another issue, again, this is for you, Mr. Romano, is broadband mapping. Current mapping practices rely on census blocks, meaning that if just one home in that block has broadband, the entire area is considered served. In rural areas, one census block can span several counties. Can you talk a little bit about the importance of establishing an accurate national broadband map?
One of the most significant problems in identifying where broadband is needed is false positives. Overstatement of coverage that leads to, in census blocks, it might be miles wide, one customer in one part of one location, denying service essentially to a customer miles and miles away. Movement towards a more granular, accurate map is going to be important. I would submit that granularity and accuracy are not the same thing. We need to both get more granular and get more accurate. Unless you're going to independently verify the submissions by providers in question, I believe you're always going to need, sort of like what RUS is looking at now, a challenge process or some way having a verification of, no matter what kind of data is submitted by a provider, ultimately having the opportunity to say, yeah, they are there, or no, they aren't. That's the only way we're going to get to make sure that no customer is left behind simply because they happen to live in a geography where somebody else claimed to serve.
Thank you, thank you. And I have just one more question for you, Ms. Bilinick. Really appreciate your remarks. And I wanted to speak to some of the limitations you outlined for CDFIs and, putting aside, the impact of Dodd-Frank. You do list a couple of other items that you think pose stress or strain on your ability to do the work that you're doing. specifically, and I just want to note too that in my district, the work that your kind of program provides has had a tremendous effect and has provided a lot of opportunities, particularly for folks actually just north in the Albany area. So really appreciate that work. But specifically, you talk about non-existent marketing budgets, challenges to capitalizing on your loan funds and/or sustaining the high overhead costs associated with labor-intensive loans we underwrite. Could you specifically tell me what we can do to help address these factors?
So I think to start, the marketing issue is an issue that all CDFIs faced. I think anyone who's worked in the industry and gone to a dinner party knows that once you tell someone that you work for a CDFI, it's then like a 20-minute later conversation describing what CDFIs do, the coverage in the whole United States, and the impact that we have. So one thing, specifically, I think, and I was actually speaking with OFN about this as well, is just a broader marketing campaign about the existence of CDFIs. I think there's, so many clients that come through our offices that say, we had no idea this existed. If I had only known 10 years ago, fill in the blank. But it's just sort of the best kept secret out there. And we really feel like that, and maybe that's more at the local level and doing, PSAs, and that, something we could certainly engage our local governments in as well. And then with regard to capitalizing our loan funds, I would just, I wouldn't say beg, but I would request that you please keep the line items for CDFI fund in Treasury and Small Business Administration fully funded, because that's something that really impacts our bottom line and is actually the lowest cost capital that we can access in terms of debt to then re-lend out. And then my last issue around the labor intensivity of the work that we do, we're really dependent on the philanthropic community, whether that be, government grants or corporate foundation grants that we rely on, just because the work that we do lending with small businesses is so intensive. If you walk into a bank, you may meet with a loan officer and then they ship your application to a central office located elsewhere, and that's sort of the end of the story. And you may have a really quick turnaround, but there's not that face-to-face and personal experience. For us, we're typically working with people who have a very big story behind what they're presenting on paper, and then in addition to that, what they're presenting on paper requires a lot of support from us to actually get from their idea phase to, like, we help people put together their projections for their loan applications to us. So we're, doing a lot of technical assistance just in the underwriting process. So it's not, we do have an algorithm that we use internally, but it's not like a spit it into the machine and get a response, which is the beauty of CDFIs. And that's how we're able to do the loans that we're able to do. But it costs a lot of money and it costs a lot of manpower, even at our most efficient. Thank you so much. Thank you.
Great, thank you so much. I want to now recognize the gentlelady from American Samoa.
Talofa, good morning. I want to thank Chairman Kim and Ranking Member Hearn for holding this hearing. I represent the territory of American Samoa. We have the highest enlistment rate in the United States Army. And because of that, we're also among the highest veteran rate per capita. Veterans and serving reservists operate businesses throughout my district. So I'd like to direct a couple of questions to you, Mr. Leghorn, though you are all welcome to answer if you have any additional input. Now, what resources are veterans currently lacking during their business creation process?
Thank you for your question, ma'am. One of the issues with the military transition assistance program is that it overly focuses on making resumes. The problem with American Samoa is that when veterans go back to American Samoa, there isn't any jobs there for them to give a resume to. What American Samoa really needs is a VBOC to so that there can be economic development and the veterans can go back and actually create jobs. So that's that's definitely something I see that needs to happen.
Okay. Your testimony highlights challenges associated with veteran participation in the federal contracting process. Can you please expand on what those challenges are and any solutions you'd recommend? And what role does mentorship play in veteran entrepreneurship?
So I think there were two questions there. I'll tackle the first one. I'll parse them apart. So in terms of participation in federal contracting, like we mentioned in our testimony, the foundation legislation that created SDVOSBs as a preferred contracting group was focused on established businesses and was not, and it was determined at the time that it was not meant for business development. So what that means is that in federal contracting right now, we see a huge sum of money being given to a very few small businesses, whereas we want the business development aspects to lead the program towards giving more money to a larger pool of veteran-owned small businesses. And the second part of the question was regarding what we're doing mentorship-wise.
Yes.
Okay, so the American Legion is one of the few organizations that offer small business counseling. We help you with your governance documents. We help you onboard to VA's Vet First program. And we provide advocacy, and also we do a lot of events that bring government officials into the room where veteran small businesses can interact with them. So pretty much advocacy, counseling, and events is what we do.
Thank you. And so as a follow-up to that, what additional resources are necessary to foster increased mentorship opportunities?
Can you clarify if you meant what the American Legion needs?
Well, what additional resources are necessary to foster increased mentorship opportunities? That would be part of it, if you want to go
Well,
into that.
I definitely think the American Legion could use another small business counselor and advocate like me. I think on the government side, we definitely want more entrepreneurial development programs for veterans. We want the programs to have more of a business development aspect. We want access to the 7J program, and definitely more VBOCs. When we're talking about mentorship, VBOCs are where the rubber meets the road for veterans.
Thank you, Mr. Chairman. I yield back.
Thank you. I wanted to now recognize the gentlelady from Kansas, Congresswoman Sharice Davis.
Good morning. Thank you for your time, and I really enjoyed reading through your testimony. I know I missed a significant portion of it, but there are a couple of things. So I'm actually in the Kansas City metro area in Kansas, and I always love to talk about how entrepreneurship is baked into the DNA of the community that I live in. And because of that, one of the things that I have seen a lot of is this idea of an ecosystem of, and actually I'm sure that you have all talked about this a lot, is the ecosystem that is needed to support entrepreneurs and small businesses as they develop and grow into, from very small businesses to small businesses that can do contracting with larger organizations. Can you talk a little bit about if it's coalition building that you've done? I know the OFN exists, and there are a few other spaces. And actually, this is probably something that all four of you could maybe say a little bit of something about. I think that when we look at statistics, like the Kansas City Fed did a report not too long ago showing that across the country, African American women are the highest, fastest growing segment of entrepreneurs. And I know in Kansas City, the Kansas City area, we've got an ecosystem that can help support folks, like a law firm. Seed Law in Kansas City does a lot of work with small businesses. We've got a number of other organizations that help people from CDFIs to they're ready to take on larger contracts. Can you talk a little bit about how we can look at, I don't know if it's metrics, I don't know what it is, but how we look at how we're supporting the entire ecosystem, not just individually CDFIs or mentoring programs. You can't mentor your way out of not having access to capital. So can you talk a little bit about that? We'll start here with Ms. Blodnick. Thank you.
So I would just say we've been very lucky in that we've had at the local level and national level sort of pre-existing coalitions like OFN, like the National Association for Latino Community Asset Builders. At the local level, we're part of a coalition called the Coalition for Nonprofit Housing and Economic Development, which is a long-standing organization that has people both from the housing and small business development side of work here in Washington, D.C. I think what's challenging, at least from my point of view, and I don't purport to speak for the entire panel, but from my perspective, I think the coalitions that exist between like organizations are there and are in place. The more challenging piece is forming coalition and community between needed partnerships that are in differing spaces. For example, you mentioned like the legal field. So we have a partnership with the DC Bar Pro Bono Legal Clinic, but was sort of happenstance because someone on our board is the person that leads that clinic. And so, I think fostering those kinds of relationships would be extremely valuable for the ecosystem. Like those of us who are operating in the same space, we know each other, we see each other at meetings, we work together. But I think the more challenging hurdle for us to overcome as an ecosystem is really bridging those networks that are sort of outside of our comfort zone or outside of our usual suspects, because those networks, I would even say for myself, the people on the panel are not people that I work with on a daily basis, and they could all we could all benefit from working together. And so, that's where I think there's a big challenge. So.
Again, thank you for your question. I think what we need to do is recognize that some groups are different. You talked about African American women being the fastest growing segment in entrepreneurship, and they are. And so when you then think about wraparound services for businesses, it's not a cookie cutter approach. I always tell businesses that they need ABC, that's the attorney, banker, and the CPA, right? And so once you have that foundational kind of activities, understand that's an integral part of your business, it kind of helps. But I agree with my colleague, there are some intersections of resources that are available. Whether you're the person that want to kick the tires and see if an idea work. Well, there are resource centers for that, whether that's PTAP, SBRC, and that kind of thing. And so just an understanding of those issues that businesses face, in particular businesses of color, and looking at micro-lending, for example, looking at alternative methods of financing businesses. Bootstrapping is, yes, universal in terms of people starting businesses, but the long-term effect of businesses that are bootstrapped, which means started without capital, on minority businesses is greater than other businesses. And so just recognizing what those nuances are relative to groups of entrepreneurs.
You sufficient? You want to follow up?
The time ran out. Do you mind? Yes. Do you mind if we take the time? Thank you.
Thank you for your question, ma'am. And I believe part of your question was regarding metrics. And that's the part that I really want to address. From our testimony, we discussed how SBA and the resource partners were really relying on metrics drawn from the 7A loan program. The 7A loan program has diminished in utilization, coinciding with the disappearance of regional and community banks. So we do not believe that the 7A loan should be used as the primary metric anymore. I don't know what other metrics might be, but we have to find other ways of getting information aside from pulling it all from 7A loans when it comes to, I think, job creation and lending.
And pick up on that point about metrics. There's no shortage of metrics in the telecommunications industry, but one thing I think that could be relevant here is in the areas our members serve, a town of 5,000 people is a metropolis. And so any small business growth there accrues to the benefit of the community as a whole because there aren't that many businesses to start. And a lot of people are working from home even as well, telecommuting, if you will, teleworking. Some way, though, it occurs to me that tracking sort of small business growth in these deeply rural areas paired with, quite frankly, and there's statistics separately on this, what kinds of increases in connectivity, what's made it possible for those small businesses to either establish, relocate, or grow in those deeply rural areas, I think is the kind of metric that would be relevant to see, the better broadband somebody gets, how much better do they do in terms of building and growing a small business.
Thank you.
Thank you so much. Thank you again to all the witnesses for taking time out of your schedule to be with us here today. And I wanted to thank my colleagues as well for their time and for their insightful questions and points. As we've heard today, we certainly have our work cut out for us. As we're striving to create more opportunities for underserved businesses, small businesses, from accessing affordable capital to being able to meaningfully compete for contracts in the federal procurement marketplace. Underrepresented entrepreneurs have had the deck stacked against them for too long, and it's kept them from creating good private sector jobs in their local neighborhoods. I look forward to working with my colleagues to find policy solutions that will empower them to create the good-paying jobs of the 21st century. I would ask unanimous consent that members have 5 legislative days to submit statements and supporting materials for the record. Without objection, so ordered. And if there's no further business to come before the committee, we are adjourned. Thank you.
Mr. Chairman,
yes,
can I say one
please.
thing? I just want, because in business you're about getting results, and I know that you're probably going to leave here and feel like that you testified and nothing really got done. But we will work hard on this because it is so important to our nation. And I said this in our full committee, that we can't have big businesses in the future if we don't have small businesses today, because we are the incubators, the small businesses for all the big businesses that we have in America today that put so many people to work. So I know you're not asking to create more programs. You're asking us to help make these better and secure them. And so I assure you that I'll work with my chairman that we make that happen with the team, that we look at every opportunity. And I am with you on the metrics. And Ms. Davids, from my colleague from Kansas, the problem in business is when you have more than one sets of books, you never get anything done. So we have to find the right numbers that measure everything, because every group that's asking us for help will say that they're the fastest growing. And so we have to really determine the fastest growing and where the real needs are, because it's different across this varied nation. And we got to make sure that we take care of everyone to the best of our abilities. Thank you.
No, thank you for that. I think that spirit and that energy is something all of us here on the subcommittee feel. There's a reason why I wanted to join this committee on small businesses, because it has a reputation of just working together across the aisle, bipartisanship, to be able to get things done for small businesses in America. And I think I'm looking forward to working with the ranking member and members on both sides for us to be able to make sure that we can move ahead in that productive way. So we certainly will follow up. We're eager to get to work and do what we can to improve the overall climate and ecosystem, to borrow a word, for small businesses in America. So thank you again. We stand adjourned. Thank you.